As you can see, I'm up like $3,000 right now from shorting gold. And yes, this is a live account, which you can see right here. Live account, real account, guys. And for those people who keep on asking me to show you live results, I've done a video of me withdrawing $50,000 and then I used that money to pay for my dad vacation. I bring him to his dream vacation and paid for everything. There's a video on that. It's called my 50k live withdrawal or something. And there's another video of me turning $500 to $9,000 in 3 days live. I'll literally show you the proof in the video as well. And yes, there are still other videos of me showing live profits. There was one where I was up like 23k and I literally posted like the freaking screenshot on Twitter and YouTube. So yeah, there you go, live trades, live profits. Just wanted to make that clear before I start this video. Without further ado, let's dive deep into this video. Now, one of the few criteria of becoming a professional trader is to understand and trade market structure. If you can understand market structure, you can understand how the market flows, how the market moves. You will be able to get nice entries. You will know when the market is done retracing so they can enter for an optimum entry, so they can have the lowest risk and the highest reward. Now, first things first, before you do anything, we need to learn how to understand market structure. So over here, you can see in an uptrend, we know that price will not just go up in a straight line or go down in a straight line in a downtrend. Price has to push, retrace a little bit, push, retrace a little bit, and push even more and retrace a little bit. So over here, you can see price did this huge impulse move. So it moved up and it starts retracing. So this is your correction phase. And then it makes another impulse move and it makes another correction, impulse, correction, so on and so forth, right? So why this happens is because during the impulse phase, right, when price push up like this, there's not enough buyers to continue for the price to continue going up, right? So there has to be some sort of retracement. So some sellers start to come in and push price down, causing this correction. Now, after price is done correcting, more buyers will start to come in and buy low and sell high, right? So they will buy at this higher low, causing the price to be pushed up even further to create a new higher high. So this is the next impulse move. And then it starts to retrace it again and then starts to push even higher. So in an uptrend like we see over here, price will be creating your higher highs, higher lows, higher highs, higher lows. So you can see this high higher than this high and this low higher than this low. So usually price will go up, break through the last higher high that we have right here, and then it will usually come down to this higher high right here, retrace back to this higher high so they can retest it so that it knows that it's solid and then creates a new higher low before pushing up and create a new higher high and retrace back to this previous higher high to create a new higher low. So what we see over here is on maybe the daily or the 4-hour time frame. On the daily or the 4-hour time frame, this is where we have your major structure, right? Market structure is much more clearer. You can clearly see the higher highs, the higher lows. But more often than not, when we go down to like the smaller time frame, the 1-hour time frame, the 15-minute time frame, or even the 5-minute time frame, all this market structure still exists, but it looks a little bit more complicated. So instead of looking like so clean, you can clearly see where's the higher highs, the higher lows, where price is pushing, where price is retracing. It's gonna be a little bit confusing to see the market structure on the smaller time frames. So over here, let's say we are doing our top-down analysis. So we see this on the daily or the 4-hour time frame, and then we zoom down to our 1-hour time frame. So on our 1-hour time frame, this is what the impulse and the correction move looks like. So over here, this is the impulse move, and the correction, and the correction. This is the correction. So in this case, right, you can see it looks a little bit more confusing now, but the concept is still the same over here. There is still your higher highs and higher lows in the uptrend. There is still your lower lows and lower highs in your downtrend. And what we have in the 1-hour time frame, the smaller time frame, is what we call the minor structure. So over there, just now we have analyzed your major structure, and now this is your minor structure. And by the way, guys, this is just a zoom in of like this area right here, a zoom in of this, and then we'll give you something like right here. So you can see, right, this impulse move is this lanky up move over here, and then this correction, this little retracement is this little downtrend that we have right here. So it's still the same thing, guys. Like you see, in an uptrend, in an impulse move, price is creating your higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And eventually, the buyers start to lose steam, like I said, and the sellers start to come in and push the price down, causing the retracement. So over here, you can see, price starts creating a new lower high. You can see this high is lower than this one right here. So the minute price starts creating a lower high right here, right, you will know that, okay, the retracement is about to start, right? This little impulse move is gonna end, and we are moving on to our correction phase that we have right here. So can you sell during this correction phase? Yes, 100%. If you're a scalper, if you're an intraday trader, you can catch some really nice shots on this little down correction that we have right here. However, if you're like a swing trader, you might want to like trade when price is done correcting. So you enter for a buy right here and continue trading this uptrend because you want to trade with the trend. So like I always said, at the end of the day, it depends on your trading style. What works for me might not work for you. So choose one and stick to it. So as I was saying, price created a lower high and then it starts going down, correcting price, and then it starts creating another lower high, lower low, lower high, and lower low. But at some point of time, you must understand that this correction will cease and this uptrend is going to continue. So how we can identify that is when price starts to create a new higher low. So you can see price starts reversing over here, price here at the down bottom starts reversing and create a new higher low. This low is higher than this low that we have right here. This tells us that there was a break of structure. Price is going to reverse right now. This correction is done, it's over. So we can look to enter for a buy somewhere right around here and trade the continue, like the uptrend. Now, if you're looking for a sniper entry, you're going to get it from the even smaller time frame, like maybe even the 15-minute time frame, especially if you're intraday trading. So right now, we are still on the 1 hour time frame looking for a minor structure. So now I'm ready for my entry. So I'm going to zoom in down to the 15-minute time frame to look for my sniper entry. So this is what price will looks like on the 15-minute time frame. Yes, it can be a little bit more messy now, but the concept is still the same here. So what you can see over here is actually the correction phase that we have right here. If you zoom it out to the 15-minute time frame, it's gonna look something like this. So as you can see, this is a correction phase, but in a correction phase, it doesn't mean that price will just go down straight. It will go down, retrace, go down, retrace, go down, retrace. That's why causing this whole confusion. But don't worry, I'm going to simplify this for you, alright? So this is the correction phase, and we can see that price got pushed down. The minute price pushed down, it's going to start retracing, right? So it starts retracing, create this little higher highs, higher lows, higher highs, and higher lows. So over here, what we can see over here is actually this little move right here. This little retracement create a new lower high. So this is actually a new lower high on the 1 hour time frame. So the minute we see this new lower high, and when I can enter for a sell is when price break through this last higher low. So you can see once price break through this last higher low, chances are price is going to continue to go down. So this is the new lower high being formed, and we can look for our short if price break through the last higher low, thus breaking market structure, which shows that price is going to reverse and head back down. And then once again, price starts going down, and then price starts retracing again, starts create another low high. So this new lower high is this one that we have right here, the second new lower high. And same thing, price break through this last higher low, guess what? I can look to sell. So over here, I've gotten like 2 short opportunities. So that's the whole map of like how market structure works, how the major structure and the minor structure comes in together to form your market structure. And it is very important for you to understand both the major structure and the minor structure, because you never ever just want to be stuck on like the smaller time frame and you just fail to see the overall big picture. And I just want to remind you guys that trading is actually very simple. You either buy low and sell high, or sell high and buy low. Fit this concept into market structure, find out what are the optimal areas to look to enter for your buy or look to enter for your sell. And guys, if you want to get good at anything, you need to start practicing. So if you still don't understand market structure, you need to go onto the empty chart, like just plug any chart, Euro USD, GBP USD, AUD USD, and start marking up your market structure. Identify the market structure, see whether price is in the uptrend or downtrend, and then start marking up your lower highs right here. Another lower high, and then another lower low and lower low. So price creating lower high, lower low, lower high, lower low, and create another new lower high and another new lower low. So this is the major structure on the 4 hour time frame, downtrend, major structure. So you can see major structure, price creating a lower high, lower low, lower high, lower low. So what you can even do is to go down to the 1 hour time frame to look for your minor structure. So once we go down to the 1 hour time frame, we can see that, okay, price is actually not that smooth anymore, right? But in a way, you can still see like the downtrend. So you can see right here, price creating a new lower high, lower low, and within this little lower low, right, price is retracing. So it's price retracing and starts creating a new little higher highs, higher lows, higher high, higher low. And then when price breaks through this last higher low, like I said, what we said. And then when price breaks through this last higher low, what we said just now is to enter for a sell. So sell right here. And another thing right here, you can see price creating this little retracement, and this is a new higher low. Once price breaks through this new higher low, look to enter for a sell, and so on and so forth, right? Like I said, all the time frames tie in together, be it the 4-hour, the 1-hour, or the 15-minute time frame. There's no like one single best time frame to trade on because it all ties in together, and you have to make use of all of these time frames if you want to trade market structure properly. So now that you have learned how to read and understand market structure, you must learn how to apply market structure. So I want to give you something that is more applicable so that you can actually apply onto your charts and start trading. So now I'm going to show you my trading strategy, how I personally trade market structure. I'm just going to show it to you guys on GBPUSD live, right? You can see right now this is the live market. You can see the timestamp right here. So over here, first things first, we have to identify the major structure on the 4-hour time frame, right? Because the major structure tells us like where is the overall trend, like where is price going overall, like on the higher time frame. So overall, we can see that price has been creating a higher highs, higher lows, higher lows, higher highs. So higher highs, higher lows, higher highs, higher lows. This is the impulse correction, and it starts creating a new higher high. So recently, this is the new higher high, and this is the new higher low. But if you look closely, there's a chance that this could be a reversal. So on a 4-hour time frame, we have identified the major structure is the uptrend, right? Then we go to the 1-hour time frame to look for our minor structure. So if you look closely at our minor structure, let me remove all this first. You can see that price did this huge consolidation that we have right here, right? This huge consolidation. So the last higher high that we have is right here. And since then, price has created a new lower high. So what does this mean? This means that there's a chance that this could be a correction or even a reversal. So knowing this, you could have easily entered for some short opportunities during this correction. Example, right here, price starts creating a new lower high. You can see this high is lower than this high that we have right here. So when price reaches this zone that we have right here, we should only be looking to sell. So price reach here 1 time, 2 time, 3 time, 3rd time, price reach this area again, and you start seeing like some sort of selling pressure, some sort of bearish candlestick, bearish engulfing candlestick, and all like little dojis that we have right here. Easily you could have entered for sell right here, stop loss above this last lower high, and take profit at the next key level, which could be somewhere right around here. Or another example that we have right here, you can see price has just been creating a higher highs, higher highs, and higher lows, right? But over here, price has started creating a new lower high. So a new low high right here because this high is lower than this one. So the minute price created a new low high, we know that, okay, the correction is about to start. Sellers have started to come in. So we can look for shorting opportunities right here. And I will personally enter a sell when price break through this last little low that we have right here. This is the last higher low. And once price breaks it, it just tells us that all hell is gonna break loose. So easily enter for a sell right here. And then once again, price goes down and it starts retracing to create potentially another lower high. So the minute price creates this new lower high, we know that within this zone over here, we should only be looking to sell. We should not be looking to buy. So easily you have entered for another sell right here, and you can start seeing price starts consolidating, and it even start to create a new higher low. So you can see this high, this low, is higher than this one. So a lot of traders might think, oh, this correction is done and price is about to go up right now, because the next thing you know, price starts giving 1, 2, 3 green candles in a row, and it followed by this huge long ass candle. So at some point of time, price literally got pushed all the way up back to this zone that we have right here before it got pushed all the way down. So a lot of beginner traders, they might take this as a reversal. They might think that this little retracement is done and right now price is gonna go up even higher. So they enter for a buy right here. Next thing you know, they get stopped out and price reverse against them and they lose a lot of money. Which is exactly why you guys cannot be stuck on like one time frame alone. So if you just stuck on 1 hour time frame alone, you might think that yes, price is gonna go up right now and you enter for a buy. So at the end of the day, always make sure you zoom out, look at the overall big picture, and we have seen on the major structure on a 4 hour time frame, price is actually correcting itself right now. So there's a chance that price is gonna go down even lower. So after I see this candlestick being formed, right, this long ass candlestick being formed, I know that this is definitely like a zone, like a little supply zone, and there's a lot of sellers at this area. So price is definitely gonna drop a lot right now. So you can have entered for another short opportunities right here. Now that is a more intraday approach, right? You can look for some nice sells during this correction. But if you are more of a swing trader who likes to trade with the trend, what you can do is that you can wait for this entire little correction to be done, for this entire gigantic correction to be done and start seeing some form of reversal, then that is when you can enter for buy. So example, price is still creating a low highs, low, 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 high, low, 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 high, low, 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 high, low, low. So over here, I want to see price break through this last lower high, come down to retest this last lower high to form your new higher low, then that is potentially telling us that this correction is done and I'm gonna be looking to enter for a buy because price is gonna go to the moon right now. But until that happens, until you see a break of structure, you should not be entering for a buy yet. And I almost forget to talk about this, but when it comes to entry, right, if you're an intraday trader, like I said, you want to enter on your 15-minute time frame, right? So over here, go down to the 15-minute time frame, and you can see there's so many opportunities where you can enter. Right here, we can see that price is creating a double or rather a triple top. 1, 2, 3, triple top. And you see a evening star candlestick pattern that we have right here. Easily enter for a sell right here because number 1, price gave us an evening star, a reversal candlestick pattern. Number 2, price is at a lower high. Price is creating a lower high. It's at this supply zone that we have right here. Number 3, triple bottom. Right, 3 confluences, easily pull the trigger, enter for a sell right here. And stop loss above the last lower high, like I said, and take profit at the next key support level, which could be somewhere right around here. And you can see price literally went down in our favor. So at the start of this video, I showed you guys how I'm up about like 3K from shorting gold. And I want to take like a few minutes just to explain this live trade that I took. The concept is still the same. Look for your major structure and then look for your minor structure. So over here, we can see the major structure in gold is that price is in the uptrend. Price is getting your higher highs, higher lows, higher highs, and higher lows. So there's impulse, correction, impulse, and even further correction. So over here, we go down to the 4-hour time frame and we can see that price was previously in like a little uptrend. But somewhere right around here, recently, price has started to reverse to become a downtrend. There's potentially a break of structure that we have right here. You can see, I've identified this is the last higher low and this is a last higher high. The minute price break through the last higher low right here, price break through the last higher low, starts coming up to retest this higher low to become a new lower high, we know that right now, price is going to reverse and it's going to go down right now. So over here, once again, you can enter for a sell when price is creating all these little lower highs right here, sell here, sell here. But to be honest with you, I wasn't looking at the charts doing like this little consolidation because I was quite busy back then. But right now, I have a little bit of free time recently, so I decided to look at gold, analyze gold, see where price is going. And I can see right here, price has just broken past this new lower low. And potentially, when price breaks through a new lower low, it's gonna come back up to retest this same lower low to create your new lower high. So I got an idea that price is gonna retrace, right? So the next thing is I went out to the 1-hour time frame to look for my minor structure. And I can see price is creating your lower highs, lower lows, lower highs, lower lows. And actually for this trade, I didn't really go down to the 15-minute time frame because I plan to like hold this trade even longer and swing this trade. So I see that price has just finished creating your new lower high right here. So I entered for a short right here, given that I have a bearish engulfing right here. And then this is price forming a new lower high, and then also price has just break through this support area and it has came up to retest it. So that was my 3 confluence, and I entered for a sell right here, place my stop loss above this last lower high, and right now we are in a little bit of profit, as you can see right here. And my take profit is all the way down at this key level that we have right here. So like I said, I plan to swing trade this, so I place my take profit all the way down at this support area. Maybe I would take partial profit somewhere right around this area, depending on what price is gonna do. So I'm just gonna be observing to see what price is doing, and then as price creates a new low highs, I'm going to be moving my stop loss from here to like the new low high. So that's just a little analysis on why I entered for this gold trade earlier. And right now price is like kind of like retracing around here, correcting itself after this little down move that we have right here. And you guys must understand, at the end of the day, corrections, retracements, they're all part of the process. Once you place the trade, I would advise you guys to just not constantly look at it, because if you constantly look at it, you might start thinking, oh no, right now price is gonna reverse and I should get out of this trade right now. And once you get out of the trade, you see that price starts going even further, going in your direction, and you end up like regretting getting out of the trade and you tell yourself, oh my god, why am I such a bad trader? Why am I such a brokey? So I just wanted to make that clear. Just trust your analysis and let the trade play out. Whether you hit the stop loss, whether you hit the take profit, I don't give a shit, alright? I'm robotic. And going forward with trading, you should have this mindset. You should adopt this mindset. If you have enjoyed this video, like, subscribe and all that stuff, and you can check out my course, link in the description. And if you want to learn more about advanced market structure, you should definitely watch this video next, because that video combined with this video will really solidify your understanding of market structure. And remember, you're just one trade away. Mwah.